What's going on, Moon Gang? I hope you're having an absolutely terrific day. My name is Matt, and in this video, I will be discussing NIO, the most exciting EV play over the past month. I will be explaining how NIO stock could very realistically be hitting $100 before we know it. I will also be doing a technical breakdown of its stock so we have a better idea of what to watch for in the immediate future. But before I get into all of that, if you're new to the channel, don't forget to join the Moon Gang by hitting the subscribe button. I'm working to hit 5,000 subscribers by the end of this year, and your help with that would be truly appreciated. Also, it would be great if you could drop a like because it really helps with getting this video in front of other traders and investors who may be interested. And now with that out of the way, let's get started. Alrighty then, I'm assuming if you're watching this video, you most likely know that NIO stock has been running straight to the moon recently, and I have some even better news for you. NIO stock can go higher if growth continues. NIO stock can be more than 3 times its present price if growth rate continues, and just for a little bit of reference, when this article was written, NIO is trading in the low 30s. NIO, a Chinese company that does not have to follow SEC quarterly reporting rules, will report its earnings on November 17th. However, the company recently provided an update on its October delivery performance, and that's exactly why the stock has been running in early November. NIO reported on November 2nd that it had delivered 5,000 electric vehicles, which was up 100% over the amount last year, and year to date, it has delivered 31,000 EVs, up 111%. If you extrapolate this growth forward, at this pace, NIO could deliver 5,750 in November and 6,540 in December. So what does this mean for NIO? Taking into account the Q2 earnings report and the recent growth rate, the author of this article is expecting NIO to produce just under 44,000 EVs in 2020 with a total revenue of $2.1 billion. His forecast for 2021 show that revenue is set to explode. After adjusting the monthly average delivery growth, he's expecting 52% growth quarter over quarter, and here you can get a graphical representation of the impressive leaps he's expecting NIO to take. From the first quarter to the last quarter, he's expecting quite a bit of growth, which explains his prediction of $11 billion in revenue compared to $2.1 for the year 2020. When you take these revenue projections and then use Tesla as a benchmark, you get some pretty interesting outcomes. By the end of 2021, it is forecasted that NIO will produce about 44% of cars that Tesla will produce this year. Its revenue could be $11 billion or 36% of Tesla's revenue. As a result, it is likely that the market might push NIO stock up to 36% or more of Tesla's present market value. That works out to $132 billion. Therefore, assuming no more capital raises and not taking into account profitability differences, NIO stock will be worth 3.17 times more or $105 per share. If you're a NIO investor, this news is obviously very exciting. I just covered the key details in this article, so I would highly recommend checking it out yourself. It can be found with a simple Google search. The golden question now is, will NIO be able to sustain this growth? To put it simply, I think that the answer is yes, and that's for 2 main reasons. First, NIO is extremely well positioned in the massive Chinese market, and second, it's looking to grow even further. Numerous media outlets are reporting that NIO is firming up plans to enter the European market in 2021. One such report stated that the company has already set up the business unit to spearhead that effort. Some rumors have it that NIO's European team will initially be headquartered in Copenhagen. Under a project codenamed Marco Polo, pretty cool name, the article stated NIO has picked up numerous employees to staff the unit. The ambitious carmaker plans to sell 7,000 of its ES8 and ES6 SUVs in Europe within 2 years. So this is how I'm seeing things. The EV sector as a whole appears to be primed up to explode over the coming decade, and more specific to NIO, it's offering a desirable product and it has a solid management team, so I see no reason why NIO couldn't ride the overall wave. I know the price target of $100 may seem lofty now, but I truly think that given enough time, this will actually be cheap. When the stock market closed for the day, it seemed like everything was green. The S&P 500, the Nasdaq 100, and the Russell 2000 were all up by 2%, and the EV sector killed it. Workhorse was up 11%, Tesla was up 4%, Hyliion was up almost 12%, Lordstown Motors was up 7%, and NIO ended the day up 12.3%, which puts its stock at $42, and if you believe the article I just covered, that means there's still $60 worth of upside over the coming year. I mean, seriously, take a look at this chart. Since the end of October, it seems like NIO only knows how to put in new highs, and people are absolutely loving it. Today's volume was 291 million shares, and the average volume over the past 10 days has only been 172 million, and at this price level, that means that NIO currently has a market cap of $41 billion. And not much is different here. Over the past week, NIO is up 26%, over the past month, it's up 87%, and from the start of the year until now, it's up 903%. Clearly, NIO is on a one-way rocket ship. If you've been keeping up to date with my previous NIO videos, you'll be familiar with this technical analysis. From this recent trendline bounce, NIO stock has managed to rally 63%. From a technical perspective, it's difficult to pick out levels of resistance at all-time highs, but I do want to bring to your attention the RSI, which is getting pretty oversold. This isn't saying that the stock has to come down, but the last two times the RSI got this high, the stock did come down a little bit to consolidate. At the time that I'm making this video, I don't own any shares of NIO. One of my recent NIO videos was made right around this high, and I explained in that video that I was looking to invest in the company somewhere between $22 and $24, but that never came, so I've been sitting on my hands and this rocket ship left without me. I am still looking to invest in this EV company, it's just a question of when. The stock could continue to run, but I think there's a very good chance that at some point in the future, it will be cheaper than $42. One of my personal trading rules is to not invest at all-time highs, and I prefer to create my positions around levels of support. Based on the most recent close, the closest support would be the recent high of $29.40, and that would be a decline of 31%, so there is a chance that the stock never returns to this level because that would be quite a drop. For me, and also possibly for you, if you also missed this ride, the best opportunity would be if a new support gets created in this region as the chart continues to develop. I think that this may happen sooner rather than later, and to better explain why I think that, let me switch over to the 4-hour chart. We have two major things going on this time frame. Number one is that the RSI is above 70, which means that the stock is overbought. And number two, we have this upward channel, which is referred to as a bear flag, and that's because they commonly break downwards. So when you put these two things together, it's telling me that there's a pretty good chance that the stock may come down and consolidate before its next rip up. Unfortunately, even on this time frame, the closest support is still pretty far away. I would be looking at 32, which is where the stock caught itself and was also rejected, and below that, we still have the previous high of $29.40. I would consider buying some shares around 32, but if the opportunity presents itself, I would heavily invest at $29.40. In an ideal world, this would happen before November 17th, which is NIO's next earnings report. It would be great if the stock could come down in this region because it would invalidate this bearish structure, and it would also give the RSI a chance to cool off, and that's exactly where I would jump in, and hopefully it happens before the next earnings announcement because I think the stock could really rip after that, especially if the overall market continues with this bullish upswing. As a quick side note, this charting software is called TradingView, and there's a link to a free 30-day trial in the description of this video. As things continue to develop both fundamentally and technically with NIO, I'll make sure to keep you updated in future videos and also keep you posted on if I ever get the opportunity to invest, so make sure you have your notifications turned on. As things currently stand, NIO is not a profitable company and it's definitely a speculative play. I would never recommend putting a large portion of your portfolio into this type of investment. But if you have an appetite for some risk, I think there's a very good chance that NIO stock will have monster returns in the coming years. So it might be worthwhile to pick up a few shares. With that being said though, these are my own opinions and I'm not a financial advisor, so make sure to do your own research. I would love to know your thoughts on NIO in a comment below. Do you think this is just the beginning, or do you think that the stock is overhyped? My entire goal with this channel is to provide as much value as I possibly can, so I truly hope that you got something out of it. If you have any suggestions or recommendations for how things could be improved, feel free to let me know. If you enjoyed this video, don't forget to drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All of that engagement really helps with getting this video in front of other people who may be interested. Thanks for watching, and until next time, best of luck in the markets.